Hey folks, this is Marsilio, and it's been a little while since I've done a video, and the technicals are pretty interesting here, so I just wanted to offer a few comments. Unlike videos of last year where I really did a comprehensive take, including a variety of technicals, fundamentals, valuation, Fed policy, sentiment, and timing, long-term and short-term. I'm just going to focus on some technicals here. So here we go. We're looking at the chart of the Dow, and what I've got on this chart are yearly pivot levels using a few different systems, and also throwing in the resistance and support levels, and then a weekly 50 period moving average that changes color to red when downward sloping. So Dow is right on its yearly pivot, fractionally below, still above its weekly 50 moving average. One of the reasons I was bullish at the start of the year was because Dow was above this level and clearly holding. It was combined with a few other things, timing, sentiment, etc. But now we're back to the yearly pivot, and huge importance in my work. Some years we wind up seeing tests of that yearly pivot more than others. Like last year, first quarter, there were several tests and a few different breaks, but then boom, had a big move down. Last August, there was one touch, one day on the Dow only, and then boom, another big move down. So we don't know what it's going to be. The most frustrating situation is a lot of chop, and that that could happen. But at the same time, if the market makes a clear move on these longer term technicals, then that could be in play for the rest, many months ahead. So that's really what I'm looking at. Dow yearly pivot just above that weekly 50. Now let's look at some other main indexes. Here's the same thing on the S&P. So, S&P did close above its yearly pivot for really 3 weeks. There was 1 week that was just above fractionally. Weekly 50 May never turned upward in slope, and now it's below everything, below the yearly pivot, acting as resistance below the weekly 50, still red. This looks bad. This is really back to a technical bear market on the S&P. NASDAQ never cleared its yearly pivot, clear resistance for 3 weeks in a row, and now back under the falling weekly 50 May as well. Bearish. Russell, surprisingly, still technically better than the NASDAQ. We don't see that all the time, but back to its yearly pivot and well above its 50 moving average, but still anything below the yearly pivot would be negative. And the last one I still like to keep an eye on, whoops, I didn't pull up the NYA this time, but this is semiconductors. One of the leaders sector-wise, especially compared to NASDAQ, semiconductors above its yearly pivot, 1, 2, 3, 4, 5 weeks. NASDAQ not even 1 week. So important level for that to hold as well, just being one of the sector leaders. Although despite the rallies, its weekly 50 May is not turned up in positive slope yet either. So a few other charts here to offer additional context. There are all different ways of approaching the market, and some people are going to try and figure out, yield spreads versus S&P, etc. And I think it's always different this time, especially as these global QE policies get unwound, and that we're facing inflation, a problem that's really unlike anything since the 70s. So if anything, we have to look at charts of the 70s. Anyway, my point here is the correlations work until they don't. What matters is the index we're trading. If we're looking at stocks, then it's that index, that sector, and that individual stock. And we can get extremely complicated if we want with all sorts of intermarket correlations. But at the end of the day, it matters the technicals on the index or asset you're invested or trading. So one index that has given very reliable information throughout the 2022 bear market was high yield bonds. And we can also see that, like tech, it never cleared its yearly pivot. And that's one thing that has been bugging me about the rally, is that this just was not confirming. and that yearly pivot was resistance for 3 weeks, and then boom, back to bear market. Any of the bond ETFs that I'm looking at are just still in terrible technical bear markets. Here's corporate bonds. Its yearly pivot was bang on resistance. So this is money, corporations are paying for their financing, and huge adjustment last year. And so this means they're paying more for financing. That means less hiring, less growth plans, and that eventually filters down through the economy. We see that through layoffs, etc. So all of the bond market ETFs did not even come close to recovering bull market status, which means yields are going up. Here's the long duration treasuries. Now, at some point, will this rally? Yeah, it might once recession fears outweigh the inflation pressures. And but it's still, if you're trading stocks, what matters is the technical index that you're trading. I've already just repeating that once again. So I'm not. Point here is yields still in an uptrend. TLT still in a long-term downtrend. Did not come close to tagging its yearly pivot. In fact, it stopped at the DeMark level. Still looks pretty bad. And here is the dollar. The fall in the dollar was what helped stock indexes and cryptos rally during this fourth quarter. And all of a sudden, dollar index back above its yearly pivot, and the weekly 50 MA still rising with a nice slope any higher. And that's going to be a full-on technical bull market, which may coincide with some interesting Mars motion. So now a little bit about timing. In March, Pluto changing sign, first time since 2008 or 9. So, this is just huge. I also think this is already starting to be felt. And Saturn also changing sign, first time in about 2.5 years. And then we'll have a Mars sign change as well. And since Mars had an extended stay in Gemini due to retrograde motion last 6 months or so, it's the first sign change for Mars in many months. These are undoubtedly going to have a significant impact on markets. And given that all the stock indexes tried to recover bull market status, some did not even make it there, like NASDAQ. Others tried a little bit, but already giving it up, like S&P. And that all the bond indexes really didn't come close. That the dollar started in a more bearish posture, but now all of a sudden, big gain last week has recovered sharply. And I'm really thinking about Saturn in Pisces, and especially going to be in the sign of Neptune. I think that the bond market is going to be more concerned with higher inflation and the Fed maintaining rates for higher for longer than a bull scenario would prefer in stocks. So if that is the correct take, then the next larger move for the next several months ahead is going to be lower for stocks. And I've already taken protective action when I suggested the rally was facing headwinds, and that was the right take. This year I'm doing less of trying to predict every day and just focusing on the big moves. Big moves have been tech rally led by semiconductors, Tesla, cryptos, and then once I said facing headwinds, that was pretty much near the top in the main index just a couple days later. So what is the big move? We do have some favorable astro in the week ahead, but if the big picture is correct, this is going to be an opportunity to get out, put on some more hedges. I'm not getting into detailed timing in this video, but watch the yearly pivots, watching the Dow yearly pivot especially, and that dollar index, if that keeps on going up, that's a proxy for Fed interest rate policy, and that's going to hurt all other risk assets. So there you go. Hope that's interesting and helpful. Thank you for your likes and follows. I do appreciate it. And that's it.